There's been a massive change in how the Fed and the Bank of England see the economy this week. It's massive for individuals. Let me tell you how it affects you, how it affects investors, how it's already affected investors, and what you need to do. First of all, what's happened and why is it important? Well, the Fed have changed what they're doing. They put interest rates on pause. That's the first time for a period of time. Bank of England, nearly 2 years of raising interest rates, and now they put them on pause. Many disagree with my perhaps controversial opinion, but I believe, despite the Fed being tough on their talk, that actually interest rates are peaking. Why would they then talk tough? Well, they don't want to overinflate the economy. So they're actually saying, proceed with caution. They're saying, as a central bank, Jerome Powell has said, we might raise interest rates. We think that interest rates are going to stay longer higher. Why? He wants to cool the market. He doesn't want people getting overexcited because that actually causes more inflation. In other words, he's keeping rates there. Bank of England, the same, and perhaps people were surprised by that. We weren't. I'll tell you why. We think the economy is already falling. You say, wow, okay, well, if you look at the stats, you'll see inflation's already started to come down in America and the UK and other places around the world. Should you be alarmed? Okay, well, let me give you both sides. If it falls too far, that's called a recession. A recession is a fall in the gross domestic product. That's the turnover of the country. If that happens, then we've never seen a situation in the last 100 years when there's been a recession, there wasn't a fall in the market. So listen on, I'll explain what to do. However, the Fed said there's not going to be a recession. We just think it's going to reduce growth. In fact, Goldman Sachs said exactly the same, and I actually agree with them. They said American economy is strong right now. It's growing by 3%. We expect it to be around 1%. In other words, they believe, as I do, that actually, yes, you're going to get slower growth in the economy, but you're actually going to have an economy still growing. And there's still opportunities. Let me explain. Even if there's a recession, if we look at the S&P 500, you'll see 500 companies. But in a recession, what you'll typically see is 300 falling, 200 going up. In other words, don't think just because perhaps there's tougher times or a flatter market, there's not opportunities. It means that perhaps you should have a percentage of your money in fixed interest. That's good to do. And if you talk to a De Beer advisor or go to De Beer Group website, we can give you information free of charge of the sorts of things that you can do. If you look at the markets, then you'll see in the stock market, there's still opportunities. There's been 10 companies done well this year, particularly ones linked to AI. However, there's 490 that have got some catching up to do. So if the economy grows, those companies are going to grow. Of course, because there is a potential growth slowing or even a recession, I'd want to be in the right companies. Which ones for me? Okay, well, the things that you should do depend on you, and you should talk to a financial advisor. But for me, I like the oil sector. We're seeing a higher price of oil, and you say, well, if demand goes down, that goes down. That could be the case, but there's still good margins for oil companies. And I actually see opportunities in that sector because of the lower pricing of that stock. And in fact, Saudi Arabia and other countries will reduce their output if they need to keep the price high. I like the sector. If you look at the bank sector, then again, if interest rates are high for longer, which is now the new view, then they have good margin. They're actually in an industry where if interest rates are high, banks actually make more money. So again, there's particular opportunities in the financial sector. But again, talk to a financial advisor. Ultimate thing for me, whilst I like those sectors, fixed interest, I like energy, I like oil, I always say diversify because you'll get good steady growth. Always better to talk to a financial advisor. I will keep you up to date though. So make sure you subscribe to my YouTube channel. Please give me a like because it helps with the algorithm and it get me know if there's extra information that you want on what's happening in the markets and how you can protect your money and make sure you achieve financial security for yourself and indeed your family's future.